BP is one of the world's largest integrated energy companies, listed on the London Stock Exchange and ADRs in New York, with a market capitalization of circa £68 billion and circa $90 billion respectively. BP is pivoting back towards its traditional upstream oil and gas business, with a renewed focus on shareholder returns, remaining an integrated energy play with strong differentiating factors, but with a less aggressive tilt towards renewables, investing with discipline in the transition. BP offers oil and gas exposure for investor portfolios with an attractive risk-reward profile and helping to offset some negative impacts of energy price spikes. Here are 5 key reasons why BP represents an interesting investment case. First, BP has fundamentally reset its strategy, re-emphasizing its higher-returning oil and gas business. While it will maintain a disciplined approach for selective renewable investments where returns compete, BP's updated approach focuses on pivoting from growing renewables to reinvesting in oil and gas, where it sees strong near-term returns. Management is aiming for adjusted free cash flow CAGR of over 20% between 2024 to 2027, with reinvestment skewed toward advantaged oil projects and LNG. Secondly, BP's strategic reset in the near term is focusing on driving performance through improving its downstream operations, as well as a self-help plan through a significant structural cost reduction program, which should see a reduction in costs of $4 to $5 billion by the end of 2027. BP is also focused on increasing the strength and resilience of its balance sheet through a significant $20 billion divestment program. Proceeds from any transaction from both Castrol and Lightsource BP will be allocated to drive down the company's net debt from $26 billion today to $14 to $18 billion by 2027. Thirdly, BP is focusing on capital discipline and cash returns. The company has committed to returning 30 to 40% of operating cash flow to shareholders through dividends and share buybacks through to 2027. With CapEx now tightly focused around $13 to $15 billion per year from over $16 billion, BP has the flexibility to continue rewarding shareholders even with a volatile macro backdrop. Fourthly, BP trades at a discount to its peers. The market is looking for BP to deliver on its new plan to address this discount. BP offers a dividend yield of circa 6% in FY26E, which is circa 6% above its peer average, while its buyback program represents an additional return. Finally, the thematic tailwind of energy security continues to benefit BP. The global repricing of energy following the Ukraine conflict has reaffirmed the critical role of oil and gas in maintaining energy affordability and security. BP's global LNG portfolio, pipeline of deepwater projects, and presence in geopolitically strategic regions make it a key beneficiary of long-term supply-demand tightness in hydrocarbons, even as low-carbon investments ramp gradually. BP offers investors a blend of value and resilience, combining discounted valuation and strong cash returns with exposure to high-margin oil and gas assets. The company's reset strategic focus enhances earnings visibility, while its integrated model and disciplined capital allocation provide downside protection and upside optionality. For investors seeking reliable income, inflation hedge characteristics, and participation in the theme of energy security, BP stands out as a differentiated and attractively positioned opportunity. For more information on BP, please visit the Edison website.